Hello friends, welcome to GST Quick Info Bite and also to today's topic, that is tax payable by promoter under RCM, that is reverse charge mechanism under section 9 subsection 4. Let's have a quick look at the various cases in which tax will be payable by RCM by the promoter under section 9 subsection 4. If a promoter wants to avail the benefit of concessional rate of GST, then 80% of value of input and input services shall be received from registered suppliers only. Where the value of input and input services received by the registered supplier during the financial year falls short of set threshold limit of 80%, then tax shall be paid by the promoter on such shortfall at the rate of 18% on RCM. However, this rule of 80% procurement from registered suppliers is not applicable. The exceptions are input service by the way of grant of development rights, that is TDR, long-term lease of land, electricity, high-speed diesel, motor spirit, and natural gas. The second situation is in case of procurement of cement by promoter from unregistered dealer or the supplier, then irrespective of the threshold limit of 80%, that is whether the total supply received from unregistered person is less than or more than 80%, GST is payable under RCM at the applicable rate on the purchase of cement, which is currently 28% in case of cement. The third situation is procurement of capital goods by a promoter from unregistered supplier. RCM is applicable whenever capital goods are received from unregistered person, whether total supply received from unregistered person is less than or more than 80%. GST is payable under RCM at the applicable rate. Moving on to the tax rates, if at all there is a shortfall from 80% threshold limit, then the shortfall will be taxed under RCM at the rate of 18%. Cement purchased from unregistered supplier will be taxed under RCM at the rate of 28%. Capital goods purchased from unregistered dealer will be taxed under RCM at the applicable rate. Moving on to the key points which needs your attention here is, the first one is excess procurement from the registered person in 1 year cannot be set off against the shortfall in the next year. The second point is the promoter shall maintain project-wise account of inward supplies from registered and unregistered suppliers. The other important point is the promoter shall calculate the payment on the shortfall at the end of the financial year. This should be paid not later than the month of June following the end of the financial year. And RCM on cement has to be paid at the end of the month in which such cement from unregistered person is received. Let's quickly walk through few illustration which makes things much clearer. For example, if total inward supply is 135 lakhs, which also includes 30 lakhs worth of TDR and 5 lakhs of diesel and 75 lakhs purchases from registered supplier. In this case, the net inward supply is total inward supplies less TDR, FSI, petrol, diesel, electricity, and motor spirit and natural gas. So in this case, the net inward supply would be 100 lakhs after excluding the 30 lakhs and 5 lakhs of TDR and HSD from the total inward supply. Now, at least 80% of 100 lakhs should have been purchased from registered supplier. That is, 80 lakhs. But actually 75 lakhs is procured from registered supplier. There is a shortfall of rupees 5 lakhs on which GST has to be discharged at the rate of 18% on RCM. Moving on to the second illustration, GST has to be paid on the purchase of cement from, in this case, since the cement is purchased from unregistered dealer, cement from unregistered dealer has to be taxed under RCM at the rate of 28%. After the payment of GST under RCM, cement will be deemed to have been purchased from the registered supplier itself. The promoter has to procure 80% of the input goods or services from the registered supplier. Now, in this case, the shortfall will be 15%. So, the promoter has to pay RCM at the rate of 18% on RCM. In the next example, promoter has procured 80% from registered supplier. However, he has procured paints, aluminium windows, ply and commercial wood from unregistered supplier. Hence, at the end of the financial year, the promoter is not required to pay GST on input as there is no shortfall from the threshold limit of 80%. Moving on to the next illustration. In this example, the promoter has procured cement from unregistered supplier for which he has to pay GST at the rate of 28% on RCM. Otherwise, he has procured 100% from registered supplier after considering the payment of GST on cement from unregistered person on RCM basis. So in this case, also the shortfall is 0. Hence, the only tax which has to be paid on RCM basis is 28% on the cement. Thank you friends for watching this video till the end. I kindly request you to subscribe to this channel.